Good afternoon, everyone. It's just after 5 o'clock here on Tuesday, the 5th of October. And the American market really strong today, staying well above that magic 4300 level on the S&P 500 that we've been talking about for quite a long time. But all the trends, ladies and gentlemen, are still down, still strongly down on both sides of the Atlantic. So on the US market, the shortest measure of the trend on VectorVest is down. The medium-term measure of the market is down. The underlying trend is down. And our longest-term signal is down. And the advice is quite clear. Sit on your hands. Okay, so I have the S&P 500 up here already. And that's the 78% level, which I've been telling everybody who listen to me is a very important level in markets these days. And you can see that the share has been accumulated down around here. Yesterday it ran down and ran the stops below those levels. And today it's run up again. Is the accumulation over? Who knows? Trends are still down. Markets making lower highs, folks. A really great market for short-term trading because it opens and goes down for the rest of the day. It opens and goes up for the rest of the day. That, I assure you, is not normal. Normal, if you get it one day a week like that, that's a lot. If we have a look at the intraday chart, you can see that yesterday it just opened, it fell for the rest of the day. And today it opened and went, so far it's gone up for most of the morning. And that's a 30-point trade. You really don't need to make any more than that on the S&P to make a very, very good living. Some friends of mine tell me that there's still big bids down around the 4250, 4260 level. And that's basically just at these old highs here. To attack liquidity underneath this pivot low in July. So I still stick by the case, folks, that this looks like an ABC move down in Elliott terms. And to actually categorically prove, at least prove as best we can in this line of work, that this pullback is over, then we need a close above this swing high, somewhere up around here. Now, you can either look for it, or the simple way would just be to wait for the VectorVest market timing signals to kick in. At the moment, nothing has kicked in. Market's got a bit of work to do before we even print a change in the short-term trend. Okay, so just sit and wait for that. I think that only intraday traders should be near the market, buying the market at this stage. And I have a position long at the moment from the break of the first 5 minutes bar this morning. Rocket science, I know. So I remain reasonably optimistic here. But I reiterate, folks, that the trends are down and the trends will be down and proven down until we see some closes above my this little blue line here. Okay, that's the gold market, and the gold market's not doing a lot. I'm long of the darn thing since 1742. Took a bit of profit, next to nothing, but nevertheless the price of a few beers on Friday night, and stop losses at entry, the darn thing can start to go or not. I think that this stochastic is starting to get overbought. It can go a long way yet, but I wouldn't be at all surprised to see it pull back and the stochastic get down here before the really big move starts. I'm very positive about the gold market, as you know, and I've sweated through an awful lot of pain in polymetal and Pan-African resources, but they're paying very good dividends and I'm happy with them. So that's my two positions, short-term positions, long of gold on a spread bet and long of the S&P 500 on a spread bet. But the S&P 500 trade is a trade, intraday trade. I'm going to take that off when I get fed up looking at it in an hour or two. In the UK, well, in the UK, lots and lots of red. Everything's pretty much the same. And our little portfolio is taking a bit of a hiding, as you can see. And Lion Trust is on watch on the death watch list. It's up a little bit today. I still haven't done anything. And Cranswick, I think, is going to have to go. But I'm looking at Cranswick, and there's a very important level on the chart, especially on the 5-year chart. If we have a look at it here, resistance here, and this support, and I'm going to be, I think myself that it's going to come off that level. It'll be bought down around that level, so I've given that the benefit of the doubt. Look at this beautiful earnings per share plot. So nothing done as yet. I've been watching Lion Trust Asset Management. I haven't done anything as yet. Market's well up today, and ladies and gentlemen, this whole concept of inflation being transitory seems to be losing momentum, and the talk now is becoming much more hawkish, and that means interest rates going up. And if interest rates go up, that's good for banks. And I see today the two top shares in the London stock market on the FTSE 100 are Barclays, which I spoke about yesterday afternoon, and Lloyd's. So it won't be in a straight line, but on both sides of the Atlantic, I would see over the next months and years, money moving out of tech, money moving into banking stocks. As interest rates go up, they simply make more money. So that's something for us to look out for. So just remember, folks, that the trends are down, and you need to watch stop losses very carefully indeed. I'm simply using the VectorVest stop loss. Many of you will have tighter stop losses, and certainly if you were trading these positions with leverage, you should have been out when the DEW signal on VectorVest UK turned down some weeks ago. Thanks very much.
Yeah.